There is a question here. Mancranso Limited. IFRS 15 revenue from contract with customers. Specify how when an IFRS reporter will recognize revenue as well as what requiring such entities to provide users of financial statements with more informative, relevant disclosures. The standard provides single principle-based five-step model to be applied to all contracts with customers. Mancranso Limited, a hotel, had the following transaction during the year. On 31st March 2009, Mancranso Limited signed a contract to supply 50,000 units of food packs at an agreed price of 10 per unit. On the same day, 30,000 units were delivered at that date, with the remainder delivered on 1st June 2019. It was agreed that the customer would have extended credit terms of 12 months from the date of delivery. Mancranso Limited cost of credit is 10%. So let us look at the first one. So on 31st March, there was a contract, the signed contract of supply of 50,000 units of goods at the price of 10 per unit. On the same day, 30,000 units was delivered at that date, with the remainder delivered in 1st June 2019. When is the accounting year? The accounting year is 31st March 2019. You can see that 31st March 2019. You went into a contract on 31st March 2019, and the contract value is 50,000 units at a price of 10. On that date, you delivered 30,000 units, and the remainder of that unit is 20,000, and you promised that you would deliver that one in 1st June 2019. And it was agreed that the 30,000 units that you delivered, the payment will come after 12 months. How do you report this? Now, you are to report as at 31st March 2019. Put that one at the back of your mind. So how do we resolve the part one? All right. The company name is Mancranso Limited. And the nature of this contract is It's a receivable. And I said that is a contract in arrears. I've already explained that. It's arrears payment. All right. So how do you deal with the matter? When you look at the question, you realize that the contract date was 31st March 2019. Okay, they went into contract to supply unit is how many? 50,000 units. Unit price of the contract is Is 10. And they've given you cost of of capital of the company, which is 10%. And in the question, they said that, so what you will do is that, so here you say performance. So this is a summary. So you say performance obligation. So what's the performance obligation? In here, there's a transfer control of the goods. So transfer control, what happens? Mancranso Limited delivery. They delivered how many goods? 30,000 units. And what is the unit price of the contract? It's 10 cedis. So when you multiply, what do you have? So that gives you your receivable is how much? 30,000 plus 10 cedis will give you 300,000. So this is what you've delivered to the company. This is what you've delivered. Remember, the total contract is 50,000, and you delivered 30,000. And they said that the 20,000. So the one that you delivered is that one on 31st March, which falls within the accounting year. And the remainder is 20,000 units, and that one will be delivered on on 31st July 2019. And this one is outside the accounting year. So this one, whether they delivered or not, it is outside the scope. or the outside the accounting year. So we will not consider that in our analysis here, because the accounting year also ends in 31st March 2019. Okay. So now we've delivered this. You've delivered. What has happened? Two things have happened. Performance obligation and what? Transfer control of the goods has happened. And so they've delivered it, right? They've delivered it. So therefore, revenue can be what? Can be recognized. Revenue can be what? Can be recognized in this instance. Now, this is the revenue, but this revenue is what? Is receivable. It is what? It is what? It's a receivable, which is what? 300,000. And then the payment date is what? Or payment term. Payment term is what? Payment term is what? 12 months. You understand? So, which means that you are not going to receive this money now. You have to receive this money in what? In 12-month times. If so, then you need to what? You need to discount this money to what? To the present value. So how do you do that? So all you have to do is that you will have your what? You'll have your what? Your receivable of how much? 300,000. Then you'll find the what? The discount factor. So the discount factor, you have what? The formula of what? 1 plus r to the power negative n. So you will have what? The bracket 1 plus. They're giving the cost of capital of 10%, which is what? 0.1 to the power of negative 1. Because they say the payment will be done in what? In one accounting year. So if so, how do we do that? So you have what? 0.909. You leave it on 1 decimal to 27 27.27. So this becomes your what? Your present value of what? Of your receivable. So this is what you report in your what? In your P&L. So this your what? Your journal entry. So your journal entry is what? Debit and credit. So what do we have here? You will have your what? You will have your receivable, which will go to what? Which will go to small financial position 2,727.27. Then you will have your what? Your revenue. So you can now recognize revenue, which is 2,727.27. So that is all about this question, which falls under what? Which falls under receivable or arrears payments. All right, and this, before you start, don't forget about your what? Your 5-step what? Model, right? Which you should what? You should be able to what? Mention them. Okay. If there's no question, that is it about this question under arrears. That is all about arrears or receivable payment. All right, so let us look at part 2 of Mancranso Limited. So we have part 2, which says during the year ended 31st March 2019, Mancranso Limited received payment in advance for the supply of 2,000 hotel room nights to customers at 100 shillings per room per night. Only 400 of these had been occupied by 31st March 2019. The amount paid by the customers are non-refundable unless the company fails to provide agreed accommodation. All right, so this simply means that the company has received in advance 2,000 hotel room of 100 cities per room. Now he was able to deliver 400. So in the contract, he's not supposed to refund the money immediately. So he has to show a commitment that he will deliver the rest of the burden. So how do we account for such arrangement. All right. So in the contract, we have what? Contract in a unit. So you're supposed to deliver 2,000, and then the unit price is what? Is 100. So that gives you what? 200,000. Now let us look at it. Let's look at what? Performance obligation in this contract, and then what? Transfer control. Now, as Mancranso Limited able to what? Deliver? As Mancranso Limited able to deliver or perform its obligation in the contract or transfer the goods what? To the customer? Has he been able to do that? He has been able to what? Done part of the contract, right? So here you have what? Your performance obligation and what? And transfer control. Can say that Mancranso Limited did delivery of what? The total of 2,000 rooms. It was able to what? Provide only 400. Unit price is what? Is 100. So the total will give you what? 40,000. So this is what Mancranso Limited was able to what? Deliver. So you can recognize this as what? As revenue. So when it is done, what will he do? He will what? He will draft his what? He will write his what? Journal entry. It will look like you have your what? Your debit, you have your credit here. So there, he took the customer's money in advance. So when you take customer's money in advance, you debit your what? You debit cash. How much did he? So watch here. So that the contract sum he took is 200,000, right? 200,000. And he was able to what? Deliver 40,000. That becomes what? Revenue to the what? To the company. So you can record only what? 40,000 of what? Of the total. Well, that is what he was able to perform, right? So performance obligation, we were able to perform what? 40,000 in what? In the total contract sum of 200,000. So the balance left, because it is in advance, the money doesn't belong to him, and it's not based on the contract. It's not supposed to do the refund immediately. So what you have to do, so the balance will what is called what? Contract liability in his book, which is what? 160,000. So that is what the journal entry that what he will draft and this. All right. So after having done this, then you can what? You can do your extracts. So your profit and those what? Extracts. You have the company accounting year is what? 31st March 2019. So you have what? Your revenue. Revenue, they are from two sources. You have the one from what? From hotel contracts, and then what? Goods delivery. So hotel contracts, he was able to what? Deliver 40,000. So that becomes what? Your revenue. And then the goods that was supposed, that one too is what? So when you go up a bit, the revenue that you received, that's it is on credit. So that is what? 27.27. All right. So anything that you can add, that gives you your total revenue. Then we can draft our statement of what? Financial position at the 1st March 2019. So that one is what? Is your liability, the money that you receive in advance and yet to deliver the contract. So that's what? Contracts, which is what? 160,000. All right. So that is it about the Mancranso Limited. There's no question. Thank you very much.